Okay, what's going on, everybody? It's your Saturday webinars here, Jesus and Lucci, and we're going to take a look again at gauging sector sentiment, and this is going to help you locate intraday trading opportunities as well as swing trading opportunities. And for the past month, and you're taking a look at the SPY chart here that is being shared by Wall Street Jesus. Since we hit those lows, down at 180 on the SPY, we have been in quite the bullish trend. To even say that, lightly, is ridiculous because the amount and the aggressiveness of the bullishness that we have seen since the lows, and we're still continuing to see up here, with people continuing to buy into the highs, continuing to look for all-time highs. And Jesus, if you go back a little bit, show them the all-time highs. I believe we're around 212 and a half on the SPY, possibly a little bit higher, somewhere around there. 212 and a half, 214 it might be, somewhere around there. Q's also around 115, and IWM is kind of way off up there. But we still have people buying into these all-time highs. And throughout this whole move up, options order flow has signaled us towards what the smarter players are moving into as far as sector rotation. Even recently, what we saw this past week, even as we go into earnings season, we are able to spot the sector rotation very quickly using the options order flow, and that will help you find the names that you want to trade and the names that you want to focus on, and more so, stop looking at the names that are just not working. Friday was a great example of a market that sold off, but there were several names that didn't even care, that were being held up, and that is how they're able to continue the bullishness in this market. We just continue to get the sector rotation. You might have a sector that they rotate out of and start coming into, and finding those opportunities is what we do best, is what Jesus and myself do best. And one of the tools that we use to help us do that is options order flow. So I'm going to let Jesus take it away here. Jesus, what you got for us, man?
Yeah, and this is a webinar. This is a topic that we've been doing a lot of webinars on, even for members. I've been trying to drill this home because, especially if you're new to the Steam Room per se, or new to Wise Guy Flow in general, this is the thing you got to nail down, okay? Because this is once you learn how to read this and utilize this information, getting a gauge on sentiment and using that as an indicator and incorporating that into your trading style, that's when you'll begin to see the light and how this information can give you a huge edge over the rest of the retail trading out there. Okay, so I want to continue to just hit on this topic and sort of drive it home, because everything else is easy to learn once you nail down this, okay? I know everybody wants to know, well, when do the trades and the winners start spitting out? And, that's obviously, retail traders always want the stock picks, but this is where you have to focus your attention on initially if you're new to this stuff, and this is where you'll figure out the winners on your own and not rely on what me and Lucci are trading, or you asking us to trade. All right, and let's take a couple of the recent examples. I'm going to start off with biotech. All right, because like Lucci mentioned, a lot of people, and listen guys, it's borderline ridiculous and stupidity now of how many eyeballs on just the FANG names, okay?
Yeah.
And how many traders just care about just those names and nothing else?
Yeah.
Right? I mean,
yeah. To that point, let me just interject here. Sorry to cut you off there, Jesus. And we see it a lot. We have to deal with a room full of eager traders, and everybody's eager, when it comes to trading, and the thing that they all want to trade is the Apple, the Facebook, the Netflix, and these are the names that they want to trade on a daily basis. The problem is that when the juice leaves these names, and let's just say you don't get the follow through that you need on the short side or the long side or whatever it is, like even if you take a look at Netflix here for the last 4 days after she reported earnings, like yeah, there's been a wide enough range for you to sit there and scalp in and out, but if you're not quick enough, what are you going to do? What are you going to do? You're going to get caught on the wrong side, and things aren't going to be that pretty for you. So if you're not able to move fast in these names, which by the way, a lot of intraday traders and a lot of retail traders, they're not, and they don't even have the technology to be able to send orders quick enough to get in and out of these things, yet they still every single day want to trade the same names. And it's frustrating for Jesus and I to have to kind of beat these people down with a stick here. It's almost like we're the old school teacher that has the ruler right there and is just smacking thumbs. But it's difficult. It's difficult. And, Jesus is going to explain here how sector rotation can save you from having that bias to just want to trade the FANG names all the damn time. So sorry to cut you off, Jesus, because
no, and that's a great point. And listen, if you enjoy trading the FANG names, okay, if you're day trading, it's one thing. And like Lucci just mentioned, if you're swing trading, if there's no momentum in the names at that time, you're going to have a real tough time, especially if you're trading options.
Yep.
Again, the wise guy action will tell you when these names are hot. Okay, when they start getting buying, that's when you can come in and play these names on dips. You can day trade them when there's the momentum and the wise guys are sweeping call side, but not every day. It's not every week. All right, but if you're swing trading, okay, and I know a lot of traders out there predominantly are swing trading. At least that's the impression I get. You have to focus on what the smart money, the sharp money, as I like to refer to it, in the option market's doing. Because if you're swing trading options, you need to be where the momentum is for you to have a shot to make money. Okay? If there is no momentum in a group or a name and you're holding calls, you're a dead man. Even if that stock does zero, the time value will eat you up and you're going to lose money. All right? My first example is going to be, the epitome of the perfect example of how wise guy action can help you avoid that sideways chop in where, you're going to get devoured on the option side. All right, so here's a chart of IBB. And you can see, as the market has rallied, okay, we had this big downtrend start of the year, the whole Hillary Clinton, you name the excuse, we have it there, and the biotechs just got destroyed, okay? So this was a sustained downtrend here. You can see we bottomed out here with the rest of the market. But what was a lot different with the biotech sector as opposed to techs and everything else, this thing really never had that rally, okay? And I'm sure a lot of players came in here thinking it was going to break out with the rest of the market and came in all along this consolidation, you can see in this box here, are hoping for a breakout, ultimately to not see it, and chances are they lost money. Okay, and what we saw initially when the market finally bottomed out, and it was right around here, okay, as you can see with the IBB, when the market hit those lows, we saw them focus primarily on tech. Okay, they came into the QQQ ETF, they came into Apple, they came into Facebook, they came into big tech. All right, and that's what took the leadership role out of the lows here. We didn't see much of any sharp buying in the biotech group. All right, and as this group got into this little consolidation period, a lot of investors and traders were looking, when will this group finally break out? When will it catch fire? And that's where this wise guy sentiment, okay, provides that edge. Because we started seeing sweepers come in, not here, but right around here, and I'll run you through exactly what took place. And again, guys, this is what I always stress. The wise guy flow, every single one of these orders, they're not stock picks. Okay, there's a lot of flow out there throughout the day. It's when it's used efficiently, it's used as an indicator of possible momentum in that name or sector, period. So you see sharp sweepers in IBB, that's telling you there's a good possibility of some strong upward momentum coming into that group. All right, and that's the way I look at it. That's the way everybody should look at it. And I'll run you through some of the IBB stuff, and you'll see exactly how it played out. All right, here on March 31st, all right, and this was later in the afternoon, we saw a buyer of 4,100 plus made 280 calls for 472. Now that in itself was a legitimate bet for IBB. Okay, you can take my word for it. IBB is not really an ETF that sees a lot of wise guy action. Very minimal, honestly. All right, so right there in itself, that one single bet got my attention because like I just mentioned to you, we didn't see any sharp orders in IBB throughout this whole consolidation period, neither in this downtrend. Okay, so on 331, which is right here, okay, this day right here, that is where we saw the first initial buying stage from wise guy action in the biotech group. And they weren't done there, and as you can see, so now again, let me just give you the whole picture here. This is the end of March, and they're going and buying May 280 calls. So basically that's telling me, you know, May is not significantly out there in time, so they're looking for a move rather quickly. Not an immediate move, but they're going out about, 2 months, and they're betting that this thing can rally nicely within the 2-month time frame. But as you can see, that's at 2:52 in the afternoon, right before the bell. Okay, and just you think of it logically, they're sneaking in an order right before the bell tells you something, again, in itself. But they come in on March 31st, and they play the 4-8 weeklies. Okay, and this was an aggressive sweeper on this bet. And they swept up 2,000 of the 4-8 265 calls for 360. Same day, okay, literally an hour later. All right, and you can see this is 331. I just want to make sure, yeah, this is 331. So you can see this thing closed right around 261, let's call it, okay? And you can see the two orders they played here. They played up to 280 here, and they played 265 a week out. So now these two orders right there tell us they're looking for upsides, okay, some nice upside by playing the 280 calls, okay, 2 months out. And not only that, they think that this thing can get hot rather quickly by playing the weeklies. All right, because otherwise, if they wanted to buy, put in another order, they would have just stayed with the Mays or even gone out a little more and taken, put on a June bet. But they played 4-8 weeklies for a reason. And again, using this information properly, I use it as an indicator, and that tells me to be ready to fire at IBB or any names that look good. If you're looking at you don't have to play the sector, okay? If you like some of the bigger biotech names and you feel they can benefit from a push higher in IBB, you can focus on that. But this day, this afternoon, and these orders were an indication that IBB was ready to get hot.
Pull up some of those names, Jesus. Pull up, pull up the Gilead, pull up the Amgen, and guys, what we're saying here, on the change in sentiment, right, the sector rotation, like when you get some of the larger players that start these moves, then you have this sort of cascade effect. Now everybody is going to go ahead and cover their shorts. People are going to start putting money towards some of these names, and we're talking about how to find tradable opportunities here and the timing for these moves. Now you have these names on your radar, okay, the Amgen, the Gilead, the Celgene, the BIIB, which was actually just a couple of days ago. This thing finally started working. So you have all these names now to come back to on a daily basis because now the sentiment has changed in this particular sector. And as long as you continue to see sweepers come into these names, which we have ever since that trade hit, we saw action on Gilead, we saw action on Amgen, we saw action on all this stuff. This is a go-to sector now for you to come back to the well here and look for the dip buys. So this is kind of what we mean about adapting, and finding opportunities in the sectors that they are currently rotating to. You can find some great opportunities when your FANG names are doing absolutely nothing.
Exactly. And that's the trick, okay? Listen, and this is why I love this topic, because if you're swing trading, okay, if if you're looking to take a size position and you're looking for a sizable move, not just a 2-day, 3-day swing, okay? Or if, like Lucci just mentioned, you're looking to day trade where the hot money is, where the momentum is, this right here, this topic right here, suits all of that, okay? If you're looking to put on a decent sized position and swing it for, let's say, a month or two and try to make a nice score, the initial buyer here in IBB off, again, this is the first sign of bullish action we've seen in IBB throughout this downtrend and consolidation period. And that's where some of the biggest winners start. They come either, like Lucci mentioned, in a change of trend or a consolidation where there's been no action. Okay, because again, that's where they start coming in. And a lot of times, they just don't stop there. When they want something, they keep coming back for more. And that's the trick. If you're looking for those sizable gains as a position trader, to get in when they initially get in. All right, and Lucci hit, all these names. Gilead right here. All right, maybe you wanted to, rather than IBB, take a position in Gilead. That's the level here where that IBB caught action, Celgene, and all these names caught action after that initial IBB buyer. Okay, they all caught bullish flow after. But I'm saying, even without the bullish flow coming in those names, you could have focused on those names just on the IBB action. Now, granted, that's more in your court because you can make a wrong decision, picking the wrong name there. But you don't necessarily have to stick with the ETF if you've been watching names in that group per se. So how this information could have benefited you if you were short, you better cover your ass. Okay, right. That's number one. Right. If you were looking to take a long position, like Lucci, for example, was throughout this whole consolidation, Lucci was dying for IBB action. Yep. Dying. And then he finally caught it and finally put down the hammer and made a nice hit there. Yep. All right, so there's a variety of ways you could take advantage of it. And let me show you quickly. Lucci, did you want to add something or?
Why don't you show them, get to last week's XBI, so that'll give them the follow.
So that's what I'm going to do here. I'm going to basically give them the timeline here to what took place after that, okay, very briefly. All right, so we had the IBB initial action there. We saw a nice move on it. The next day after, it was weak, a little bit soft at the open, but held up pretty well, actually, as opposed to the rest of the market. Offered you another opportunity to get in the next day, and then started pushing higher. Okay, and then what we saw after that, after the strength, we saw this here, which was relevant in itself. Okay, here you could see there was an alert in the Steam room and private Twitter. The wise guy closed profit in those 4,200 May 280 calls. Okay, the ones he bought back in that initial action, he doubled his money there, and now he rolled them up into May 295 calls. So what the player did there, and why this was significant, he took some of the profit, put it in his pocket, rolled up to the 295 strike, but stood in May, okay, looking for further upside. All right, so now why is that significant? That's not telling me necessarily that this thing is going to take off from here, but it may pause, actually, because he locked in some gain. Yes, he didn't close out the position, but he put some money in his pocket, and he rolled up in strike. So he's looking for more, but he's thinking maybe this may need to consolidate a bit off this initial push higher. All right, and that was over here. So you could see here, we had a couple days of weakness, then came right back, then consolidated, and Lucci will tell you all day long, if you're stuck in calls here, if you can avoid it, how big of a deal is that, Lucci, if you can avoid this consolidation with no real movement at all?
Yeah, and you'll start to feel it, just with the order flow. It's like this is the experience part of everything, right? And this is the experience part of being a trader and being an options trader. Like when you get a 20-point move on a name like IBB, or what was it? That was almost 30 points. These things don't just go straight up. You get that clean 2-3 day, maybe a week breakout action, and then you're going to get a lot of chop. And this is, again, why it's so important to understand sector rotation, because during all that chop in pharma, There was names that they rotated to, and guess what that name was? Was Bank of America, and it was J.P. Morgan, and it was all the banks. And we'll go ahead and do that one as well for you guys a little bit later on. So again, the sector rotation can really help you during the periods of chop, which most stocks sit in for a majority of the time. 80% of the time, these stocks are doing nothing. You don't get that clean action intraday. You don't get that clean action overnight, and you kind of have to wait these things out and wait, for call sweepers to really start the move again through, fresh highs, wherever that might be, and to start coming in for some dip buys. So this is the experience part that comes with options trading, because during consolidation, if anybody's holding these options, you are going to lose time premium. And that's why these smarter players, they roll out to the next month, they close their positions, they go to the next month. That way they're not going to get smoked on time premium, and they still get the upside. They still get the upside. So again, you got to start adapting and using some of the techniques that the smarter players are using.
Yeah, and listen, if you're in the underlying, okay, if you're in stock per se, you don't necessarily have to react off that order. But if you're an aggressive options trader, it may be prudent to do that. Again, you want to take advantage when these things are in play and these things are hot if you're playing calls. Okay, especially in shorter duration time periods. So that right there just basically told me that this thing may need to breathe for a bit. That's it. Not that the run was over and not anything more, just that it needed to breathe a bit. And now what happened is, after that, and members of the steam room would tell you, right around here basically, when it bottomed out, we were focusing and looking for IBB sweepers and biotech sweepers to come back in. Okay, that's what, because we knew that chances are this didn't end here. Usually when they come in that aggressively and that sharp, they're coming in for more, just probably after a little bit of a consolidation or a pullback. All right, and I'll run you through what happened next, and you'll see how it played out perfectly.
Yeah, what happened next is dope. I mean, this XBI buyer that Jesus is going to show you. I mean, this one was amazing. I saw that. I'm like, oh boy, here we go.
Here's the one, okay, one small sweeper on April 18th. He came in as weeklies, all right? So that pretty much, you could see here on April 18th, that told us that they were ready. So now we're looking for them to come in firing here, okay? And like Lucci pretty much gave it away here, that XBI, what the heck? Oh, here it is. Oh, no, it's not. Hold on one second. Bear with me.
Yeah.
All right.
I think we had a...
Oh, I got to go to XBI here. That's why. Hang on, because it's a different symbol.
Yeah.
So the XBI, which is another biotech ETF, all right, here's what they came in here. Bullish wise guy action, May 60 calls, almost a $2 million bet
So
there.
ridiculous.
Okay?
So ridiculous.
There's no such thing as that in XBI. All right? $2 million bet. The ETF was at $56.54 at the time. All right, that's on April 21st, so just recently here. All right, here's where IBB was that morning when the trade came in. All right, it was actually red that morning, a little bit red, not much. And XBI, this is just a couple days ago, guys. All right, XBI was right here, and then had a monster move in a weak market, mind you. Okay, a couple days ago, and tacked on a little bit more yesterday in a weak market again. All right, so this, you can see how it all played out. All right, the IBB was the initial buyer, the whole change in sentiment that told us to get in, position accordingly. The biotechs may get hot. You saw how the roll-up sort of signaled a little consolidation, nothing major, and then the XBI comes in with a $2 million bet to light these things up here, and we'll probably see more of these guys come in next week or in the coming days and see this thing finally break out and really start to pay off. Now, there's a number of things. Okay, like I said, if you want to catch the big move, it's prudent to stick to the initial entry. Okay, and that's the IBB initial buyer, because you got to understand something. Like Lucci mentioned, this is 30 points higher. 30 points. That's no small coconuts there. So that's a big move in itself. So when you want to take a decent sized position to catch a big move, I would recommend always sticking to the initial entry. But if you want to swing trade for a couple of days, if you want to day trade the momentum, we've been doing all that, guys, off this XBI. Okay, we bought it that day, we traded it. Guys yesterday bought weakness and traded it. So there's a number of routes you can go depending on what type of trader you are. But this is just a perfect example of how the wise guy flow and the short money positioning in the option market told us exactly what was going to take place in that biotech sector.
You got Jordan Williams here, who is definitely a member with us. What's your name in the chat room, bro? He said then Labu came in like 30 minutes. Oh,
Labu,
Jay Wills,
yes.
what's going on, man? Yeah, Labu came in 30 minutes later. Labu is another. Yep. ETF here, and they tagged all three of these. So in reality, guys, by the way, like all of them are primed for further moves higher. So again, this is a sector that is still in play, and as the market continues to be bullish, you have dip buy opportunities for these ETFs as well as some of the individual names. Jesus, you want to show the Biogen too for a couple of days ago? Can you?
Which one's that?
Can you pull that one up? You know the Biogen, BIIB.
Oh, BIIB. Okay, yes, that's funny.
So this one they finally started tagging. There was a couple people that were like a little bit too early to the trade. So sometimes they don't always get it right. I mean, there was some people on this Biogen that were buying 280 calls like way back and definitely got smoked out of it. This one was a little bit harder to trade, but finally.
Well, they had earnings. Earnings.
It was all the earnings, right.
Yeah. So they had the stock caught a nice order, an earnings bet, traded lower prior to earnings, and then had a huge move higher after earnings here. And then yesterday caught some significant action in June calls, really nice trades in June calls. So like I said, the BIIB is an individual name, had earnings, so you had to kind of worry about that risk. But yesterday they came in buying some more, and ultimately this looks like it's going to start moving now with the rest of the biotech sector. But, you know, names like Gilead from names like speculative names like Jazz were tagged along this whole IBB flow. Jazz, they hit a nice one in recently. They had weeklies and I think May monthlies there. So again, there's a variety of names, and depending on your risk tolerance, that you can partake in. I would suggest, if you're kind of on the new side of this, to stick with more of the bigger names. You got to be careful with the smaller biotech names. Those things are landmines if you get some bad news. But you know, the ETFs, the bigger names, you could definitely play all those things. All right, and this is not just one example, guys. I mean, there's a list from here to Chicago of sector rotation and sentiment rotation in different groups and different names, that when you stick to the initial buying there can just be so beneficial to your trading. Like Lucy's mentioned, Bank of America and the financials were a group. This was just amazing. And what happened here was we had some bullish action in Bank of America off the lows into here. A lot of call buying into here. Then we sort of had this consolidation where this whole sector and Bank of America were drifting lower, and a lot of people were starting to get really bearish on this banks, you know, based on Fed and Yellen reasons. Okay, and honestly, they're legitimate reasons. But the flow started telling us otherwise. And what we see in here, and this was a Fed day, if I'm not mistaken, as they were selling in the banks, market selling, okay, I'm not talking about wise guys selling, we started seeing put selling, okay, opening put sellers come into some of these financial names. So, you know, as everybody's really bearish on the banks and has no reason to own them, we were thinking maybe they'll come in and start playing some puts on these banks. They started selling to open puts on these banks, all right? And that really caught our eye as to maybe here's a start of some rotation into the banks. It's, you know, the market sentiment right now. And Bank of America, Deutsche Bank, Wells Fargo, all recently have just been on fire. All right, and I'll take you back here. As you can see here, this is because the private Twitter don't let us search anymore. But banks hot all morning. DB, BAC, Citigroup all catch aggressive sweepers. The banks as a whole all caught action. After this initial put selling action, we saw it in Morgan Stanley right here. We saw some put selling in Goldman Sachs right over here. And then all call buying to follow. Citigroup was one of the hot names that called call sweepers. Bank of America has just been, I mentioned a couple times, I haven't seen Bank of America move like this in call buying. I can't remember how long. You know, this thing is usually really slow. Lucci, you know it better than anybody.
Yeah.
But they're tattooing this thing.
Yeah, and we can't go a day. We cannot go a day in the steam room without seeing at least 8 to 10 aggressive buying in Bank of America and a lot of bank names in general. And you only get these moves every once in a while, just like the IBB. Now this is the rotation that is continuing to hold this market up. While and if you take a look at Friday's action on some of the FANG names here, Jesus, let's throw that for them. Give them a Facebook. Give them the Facebook or the Apple or one of the two. Yeah, you see this? So you get a gap down off the Google stuff. Google earnings weren't, or at least the reaction to the earnings wasn't that great. So they come into these FANG names and they start selling the crap out of this stuff. And meanwhile, Bank of America just sits at $15. It sits at $15, and usually you never see that. If the market goes down 10 handles on the SPY, or even more than that, which we were down, but Bank of America is always going down. Now we have clear sector rotation, clear definable, sector rotation where we can be confident in what's going to happen with these names. And this is what's so powerful about just understanding and accepting the rotation, seeing the smart money going to these particular names. That way you can just flag all this stuff for solid dip buy opportunities. So take a look at JP Morgan. There's Goldman Sachs too. Goldman Sachs is a little bit of a laggard here still. JP Morgan
got earnings.
Yeah.
Earnings coming.
Well, she already reported. She did already report. So Goldman is all the bank. Yeah, all the banks.
Oh, that's awesome.
Everything's done. And Goldman caught another, 170 call buyer. People that are going a little bit out, continuing to roll out.
Citigroup has been hot.
So
catching a lot of call buying that city.
All of these names, now you're going to have to wait for a little bit of consolidation, obviously, and then wait for the market to make, to make another breakout. But this is a great sector now to look for some aggressive dips where people get a little shook, people get a little scared. That's where you want to come in and start chewing up some of these names.
Yeah, and here I just want to mention, because this is an important point, okay? Again, if you're looking to hold a position for a longer time frame, okay, and looking for that big move, all right? So basically you're looking to trade less, but you're looking for that big move. You have to try to stick to the initial action, all right? So the initial activity in Bank of America was down here, okay? So if you missed that, all right, you have to wait for another decent-sized consolidation in the banks or a downtrend in the banks to reverse to focus on the banks again. Now, if you're any other type of trader, swing trader, meaning short-term trader over a course of a week or a course of a couple of days, you can focus, like Lucci mentioned, on any dips, okay? And the reason why I say that, I'll take Netflix, for example, all right? Netflix, the initial buying in Netflix started right over here. That was the first sharp May sweeper we saw in Netflix, okay? So that was the initial buying that you would have to get in if you were looking for that bigger move per se, all right? Now, if you just wanted to swing trade the name or even day trade the name on weakness, there were several other Netflix sharp orders there. Look, one here on the pullback you could have traded, one here on the pullback. So what a lot of people think is just because Netflix has been catching action throughout, that you could buy it up here into earnings and make money. All right, and it doesn't work that way. Like I said, if you're looking for the bigger, the bigger hit, you have to stick to initial buying. Otherwise, you have to focus on flow coming into weakness. All right, to just go out there and buy Bank of America right now up here for a long-term swing, you're asking for trouble, especially on the call side. Okay, because obviously there's going to be some consolidation or pullback coming. It may push a little bit higher, but at some point there will be some consolidation and pullback. And here's another perfect example I just want to hit on. All right, the GDX. I mean, this thing caught a ton of action going back to February. That's when initial call sweepers got into the gold mining ETF. All right, and then as you can see, we saw bullish flow and a strong move in this GDX, over the course of a good month and a half. Then you could see right here we consolidated a bit, all right? Sort of chopped around the range where you want to try to avoid. And if you missed out on this opportunity, you're looking for some bullish action in this chop area, in order to play the upside. And GDX, it played out exactly as such. All right, call sweepers down there, the initial entry, and then what we seen was a huge put seller. All right, this was on, again, a Fed day, I think. I'm almost positive. But March 29th at 12 o'clock in the afternoon, they nailed the lows in this thing. 45,000, okay, players sold to open 45,000 of the May 18 puts. Just threw it at the bid. Boom, 45,000. So, that's as bullish as you get. All right, and right that day, I actually set up a great day trade. I think GDX was red, ultimately stormed higher. You could see up here was up $1.12 from being down on the day. All right, and then set up the call sweepers coming in for another big move to highs. And on top of that, Nugget. All right, everybody knows about that Nugget. That Nugget caught call sweepers as well. And I'll pull that up for you. So again, like we mentioned, the IBB, the XBI, the LABU that one of the members brought up. Same thing happened in GDX. They came in hitting gold, the miners, they hit the Nugget. All right, this Nugget was a huge, huge winner. Yep. Here, right here. Here, a player played out of the money 90 calls, okay? And this was when the stock was $55 on that Nugget. And he was playing 90 calls right here.
Yeah, we thought he was crazy. We thought it was freaking mine. This guy paid $1 for 90 calls. It wasn't even, he didn't even get that much time. It was like the end of the month that he got. And we were, both Jesus and I were like, what is this guy doing? And sure enough, the next day, gapped up 5 points. And just a 5-point move in Nugget created, this guy made double his money immediately just on a 5-point move. And then I started looking at it. I was like, whoa, this is really interesting here. And then boom, the next 2 days, the guy comes out at $3-4 on that option. I couldn't believe it.
Yeah. And again, yeah, he played the 429 weeklies, and basically that was in just here beginning of April. So I think it was only 3 weeks, 3 weeks out that he was looking for a double. So absurd. And you know what else I found, Lucci? What was interesting? Look here, on February 11th. There was a Nugget buyer going out as far as to Jan.
Oh, so look how much before that. Wow.
Even before that, earlier, and that was over here in this move. And God knows what these things are worth. He was playing Jan 60s. So, and I don't even know if he's in it. So again, it's my point being in all this stuff is it's not all about one alert. Okay, guys, we see guys come in, they sign up for private Twitter, or they take the trial in the steam room, and they're looking for stock picks. They play 2 random picks. They win one, they lose one, they lose interest, and good night, Irene. It's not about that, guys. It's about understanding and reading what the sharp money and how they are positioning aggressively, mind you, in the option market. And that's an edge that nobody else has in real time. All right, yes, I'm biased because, that's all I've done. That's the only way I've made money consistently in this game is off this intel. That's it. And you can see it's not just about looking at each individual order. Another comment, and I know I'm rambling here, but I just want another comment I get a lot of times on Wise Guy Action is, sometimes there's too much flow. There's too many alerts. And once you understand this stuff, the more alerts, the merrier. Because again, it's not about the one alert. It's about tying it all together. It's about seeing Bank of America, Bank of America, Bank of America, Bank of America. You know what I mean? And telling you what's taking place. So that's what I want, and that's why I love this topic, Lucci, because it can be used by any trader out there, no matter what you're trading.
Right.
The information can be used in this sort of way, and it's really valuable, guys. It's really valuable.
Nice, nice. Okay, guys. All right. So why don't we go ahead and wrap it up, then take some questions. So go ahead and, throw your questions in the chat box. You guys can go ahead and ask us anything about specifically about the Steam Room in general, about order flow, maybe some trading issues that you guys might be having. We'll take a bunch of questions right now. Again, for the people in this webinar, and those that are registered to this webinar here, Jesus, I'm going to take back the screen from you there.
Okay.
So for the people here that are registered to the webinar, you guys are going to get a nice little discount, nice fat discount here on your first month just to try the Steam Room out. You'll go ahead and use this this link up here. I'll go ahead and send it to you guys so that you can use for your first month discount. We'll bill you $49 for the first month, and then after that you'll get recurring at $199. And again, check it out. Check it out. Check out the Steam. See how this sector rotation can really help you refine and even define some of the names that you want to look for. And like Jesus was closing up there, it's like it's like people complain a lot about. I mean, we get a lot of complaining just in general, and that always comes from those who, let's just say they don't want to do an extra layer of work, let's say, okay, or effort, more or less, right? You just kind of want the alerts. You want to come in there. You want to know, where do I buy this thing? Where do I sell this thing? And all that. And, we cater to a trader who, let's just say, has been around for a little bit, has taken some losses, is trying to figure out where his game is and her game is trying to figure out, what their strategy is, what strategy suits their personality, what kind of risk they want to take, what kind of risk they're not comfortable with. So we cater best to the trader who's kind of, dabbled a little bit, had some losses, is kind of frustrated, trying to figure out, like, okay, how am I really going to make this work? And that's the trader who we really cater to, and who gets the most out of the Steam Room here. And we're kind of, we're trying to get traders to come over to our side and see that, and see that kind of sort of light at the end of the tunnel. Because again, like, there's a lot of traders that are let's just say flopping around to different services just looking for those those meal tickets kind of thing. And eventually, guess what happens? Like, they'll come find us anyway. They will come find us anyway because they're going to take their licks in the market. Maybe they'll have a little bit of short-term success, but emotions are going to kick in. They're going to end up blowing up their accounts, or, something bad or something unforeseen is going to happen. And they're going to come to this epiphany that, damn, maybe this is not as easy as I thought it was, and maybe I got to take a look deeper into my strategy, deeper into my emotions, deeper into all this kind of stuff. So that's the trader who really gets the most out of the Steam Room, and we have a solid community in there right now of those types of traders who are willing to all chip in, work on things together, work on their issues that they're having together. And again, we are the sort of shepherds of this room, Jesus and myself, and that's the kind of place where we want to continue to build. So we got a couple questions here coming in. We got Carlos is saying, is buying or selling breakout a failed strategy using options? I feel that I'm losing money even though the underlying moves my direction. This is a big question. This is a really big question. I will say that in 2014 and 2015, the breakout trade never worked. It didn't work. It didn't work for options traders at all. Now that we're in a bullish environment and that we are continuing to go higher, the breakout trade is coming back. And like all things in the market, it only exists for a while and then it disappears. So you might have an edge in something for a little bit, and eventually that edge is going to disappear some way, somehow. Even if you have an automated strategy, there's only a certain amount of time or a certain environment that you can identify and continue to make money off of that particular edge. At some point, somebody is on the losing side of that trade, and that edge is going to disappear. So even with breakout trading, breakdown trading, it's gotten much more difficult, Carlos, especially from the options perspective. And it's great that you're even realizing that, because maybe now, you need to look at options from a different point of view and look at your entries a little bit more, and scrutinize your entries a little bit more, because I know exactly what you're saying. You'll get a move that looks like a breakout, and everybody will pile in and pay up for those options, and guess what? Market gives you no follow through, and the next day those options are worth 50% less, and maybe a week later you get your move. So I know exactly what you mean, Carlos. And this is one of the difficult parts about being an options trader and looking for breakouts and breakdowns. Jesus, any comments on the breakdown?
Yeah, I agree. I'm not a big fan of that style at all. And this is coming from a trader and a broker who focused primarily only on breakouts. In the year 2000, actually had one of my most successful years in 2001, buying a lot of small cap breakouts, and then eventually, like Lucci mentioned, started losing money, and I realized that everybody's looking at the breakout. When there's that many eyeballs on something, usually they're going to reel you in and eat you up, all right? And what I found, even with Wise Guy action, and it's just amazing how you just see it at times, you and I have been talking about this, how they'll buy weakness. When things pull back and almost look like the worst time to buy, that's when these guys come in.
That's when these guys come in, and it gets me to this day, because I consider myself a pretty experienced trader, and to see the smarter money come in and, let's say, buy Bank of America at 12.5 when it looks like death. It looked like absolute death. I was so convinced that that the stock was done because of what was happening in Deutsche Bank and what was happening across the banking world in Europe or whatever. And these guys were buying 13.5 and 14.5 calls at 12.5 when nobody else wanted the shit. And finally, the thing got back to 13.5. I was like, all right, fine. Now I'm going to go ahead and buy this. But I missed all that premium. They are coming in and buying all the premium that guys like Carlos and myself are selling. Okay, we're getting in. What's happening in breakout world is most of retail is getting in too early, and we are selling to the smart money. And we are selling to market makers at 70, 80, 90% discount on the options. And then these guys are taking it to the freaking bank. They own all the contracts, and now finally these things can move. Same thing happened in IBB. Same thing happened all over the place with breakout trading. It is amazing. It is amazing how good these guys are.
Yeah, and then, what we see now, and we're going to see, is all that tack-on action, okay? We see Bank of America calls left and right. They're rolling up, they're rolling out, they're adding some weeklies. This is all tack-on action now, guys. The initial sharp action came in when that thing looked awful, all right? So that's why I stress, when you're looking to trade on rather quickly, it's fine to buy to look to trade off the tack-on action. But if you're looking to take a position like Carlos is probably doing, but was doing it on the breakout side, it's actually the total opposite. Okay, you got to look for that initial action, Carlos, and that usually come when things are weak, when things look ugly, and at the same time, you're not getting robbed if you're playing calls. So there's an edge to that.
Indeed, indeed. All right, so we got a bunch of other questions here. Let's try to get through some of these things. We got JC here regarding the Icon rumor of him starting to buy Netflix shares. Do you think we would see his order flows, or do you think he will quietly accumulate shares? Just wanted to know if there's any way we can confirm rumors like that by seeing his orders, or another way. I mean, again, like, unless you're a seasoned tape reader, which takes years of discipline, and you're looking at a level 2 and a time in sales, and you're trying to figure out exactly what's going on. Netflix right now, after the earnings, is just kind of stalled out. And when you hear rumors of Icon buying, it's like you don't know when he's got to disclose that, right? But he's got several days, weeks even, to disclose that position. So he might already have accumulated everything. You know, even if this guy wants another 500,000 shares, that ain't gonna move. It's Netflix you're talking about. You know what I mean? So you know, you really have to go deep into the tape if you want exact information on, you know, if a rumor is true or not. Like for example, the Wynn, you know, Stevie Wynn buying his stock at $60 or under $60. I mean, that was huge just because that stock has been a dog for all kinds of, you know, all kinds of time. So, you know, that one had a little bit of different pop to it. Plus, we saw some options order flow there as well. You know, Netflix is more of a different one. When you hear these rumors, you may not always see the immediate action here. Jesus, any comments on the Netflix?
Yeah, well, no, we've seen, I don't know if he's referring to the stock or the option
The
flow.
stock. Yeah, the stock.
Oh, the stock. Okay, because in regards to the option flow, we've seen many, and that's what we're looking at, guys. You know, we never know for sure who's buying these things, but we find out after the fact. Like, for example, those Twitter leaps we kept seeing hitting the flow. That supposedly was Bill Miller, okay, a fund manager, swinging a big hammer there. Many names we spotted some sharp action in, and it happened to be Icon playing the option market. So again, we don't know for sure, but you find out after the fact.
Yep.
When it comes to options flow per se, and to stock really. I mean, when you get that information, it's too late basically.
Yep, absolutely. All right, we got a couple more questions here. Again, we'll try to get through some of these questions, a few of the rest of these. Again, use the link that I dropped there for you. Check us out in the Steam room here, also the private Twitter, just for $49 for your first month, and then you get billed after $199. Again, the order flow will also, to JC's point on the Netflix, eventually signal the turnaround. I mean, there's already people dip buying Netflix, obviously, but they're buying time. You know, they're buying a lot of time. Yeah, there's people buying September out there to Netflix. So, you know, nobody's aggressively coming in and saying, hey, this shit's going to $100 next freaking week. You know, nobody's really doing that yet. Plus, the market is in la-la land because we're in earnings. So after you get an earnings announcement like the one that we've seen on Netflix, you're not immediately going to get the reaction. I mean, take a look at the Google, too. You look at the Google, this thing gapped to what, 730, whatever the hell it's at. I'm talking about the Google, not the Goog. That's the one that I usually trade. You know, and that thing's probably just going to sit around 4 or 5 days. And plus, I would love to mention that previous earnings on Google and all the FANG names for the last 2 reports, or maybe the 3 reports, what have we seen, Jesus? We've seen a huge run-up, right, into the actual call. We've seen them beat on the call, and everybody got rich, right? Everybody got rich on the call side. Now, do you expect the same thing to keep happening over and over and over? Do you really expect that shit to happen over and over like that, okay? And back to Carlos's point, any edge in the market or anything that is there, maybe it exists for a while, it disappears. It disappears and it screws everybody, okay? The same thing happened to Facebook, the same thing happened to Google, or sorry, the Google right now, and the same thing happened to freaking Netflix, all right? Everybody was super over-levered long because they wanted the same juice that they've gotten before, and guess what? They all got taken to the freaking woodshed, okay? So careful when you get too biased on some of these things.
The market sets you up, Luigi. It sets up everybody, you know, and the funny thing is like you mentioned, the last quarter, people either missed out maybe on that Google blowout report in that big run, or maybe had a small position, so they go in here bigger, thinking they're going to hit it this time, and splat, you know? So this game is never that easy. That's why, you know, a lot of, and I used to be a technical guy, you know, as far as charts are concerned, but when there's so many eyeballs looking at the same thing, I mean, just think of it logically. You think
Yep.
all those guys are going to get rich and get paid off that? Come on, it don't work that way.
It doesn't work that way. All right, so let's see. We got another question here from Sujay. Do you see the time and sales of options or stocks? I look at both. Me personally, I look at both. Jesus doesn't look at either one. You know, he doesn't need to look at the He doesn't need to look at any of that stuff because the way that he trades and the strategy that he has built for himself that works for him, it doesn't lend itself to looking at ticks on a freaking, on a time and sales. For me, I want to make sure I need to get, for example, like you go back to that IBB trade, like I look to put in size on a move that I'm going to get some follow through, right? Now, when I put in that size, I'm putting a lot of risk out there. And if I don't know for sure this thing is moving in my direction, I got to get the hell out extremely quick and minimize my loss. So that basically forces me to watch time and sales of options, to watch time and sales of stocks. That way I can make sure, on the risk side, I'm covered. And that way, if the tape looks funky, I can go ahead and bail and minimize some of my risk. So that's kind of my thing.
And that's the beauty of it, Lucci. Me and you, we're two opposites as far as trading is concerned, okay?
Yep.
And we both find success, and we both find the Wise Guy Flow quite useful, okay? And to provide us our edge. I mean, what Lucci does in utilizing the Wise Guy action is just, it's a beauty in itself, because he's watching tape already. So he already has a game plan mapped out in his head. IBB is already in his head. So he's just looking for Wise Guy sweepers as that confirmation.
Right.
Once the sharp money starts getting aggressive to what he already sees, boom. That's all it takes, guys.
That's it.
So, you know what I mean? It's not, there's no one rhyme or reason to all this. There's no one way to trade all this.
Yep.
There's a plan behind it, and the plan has to go according to what you feel comfortable doing, are successful doing, and your risk parameters. I mean, that's what it comes down to.
Indeed. Sujay is saying, do you teach how to read that in your chat room, or do we need to take courses? Yeah, Sujay, that's a much higher level course. Again, tape reading is more or less a lost art. Nobody even uses this shit anymore. But to me, tape is the only real thing that's there because, again, you're analyzing real transactions. I mean, you take it back to the ticker tape, back in the 50s when the market first started offering public shares. That's how people that's how people knew where a stock was trading. And, every time a transaction was made, you would get it printed out on this tape, and that's where the science came from, and that's where everything came from. Now, because again, it's such a complicated science and it's so abstract, it's like learning a new freaking language. You had all this stuff in the 80s that was built around it. Technical analysis, charting, volume profiling, moving averages, and all this bullshit technical indicators, which they worked for a while. They worked for a while because, people started to use them and all that kind of stuff. Now, we are in a computer-driven environment. You are fighting against a algorithm. You are not buying stock or buying options from Joe Schmo Carlos in here, and no offense to Carlos, you know what I mean? I'm just using you as an example. You're not buying options from freaking Jay Wills over here, or JC, or James C. You ain't buying options from these guys, or from me. You're buying it from a freaking machine. That's where you're buying it from. A smart machine, by the way, who has a lot of data behind it, who has freaking behavioral science behind it, who has market structure shit behind it, and who's got crazy money and crazy time behind it. Okay? That's who you're playing against. All right? So, the tape reading goes back to that, too, because it's the only real thing that exists. But again, it's a very difficult thing to learn. So, Sujay, we do offer
It's amazing how tape reading just lost its interest. I mean, and here's the thing, okay? Like me and Lucci, we bust chops about technical analysis and charting and all that. A lot of people use that for the wrong thing. I mean, basically, technical analysis is to define your risk. In other words, if you're looking to get long, here's where you get in trouble. Here's where you might want to take profits. It's sort of a game plan. It's not a buy-sell indicator, okay? It's sort of to map out a trade. But people out there you see them draw on the chart, they could draw them anywhere, and they hit some bar. You know what I mean? So the difference with this stuff is it's real. Like Lucha's watching tape, it's real.
Yep.
I'm watching Wise Guy Flow, it's real. I mean, it's real, guys.
Yep.
These are sharp players sweeping offers in the option market.
Yeah, I'll give you guys a perfect example of what Jesus is saying. And again, I wish I could show it just with the actual tape too. I have been trading names, and I'm sitting there looking at my options level 2, and I'm looking at the time and sales, and I'll see huge paper come into the market, right? And I'll see I will see people sweep thousands of contracts in the stuff that I'm trading, and sure as you know it, a second later, the alert will come out in the steam room as some kind of aggressive order flow just hit. And I sat there and I watched that guy hit it. And a second later, boom, it pops up in the steam room, and I'm like, oh, holy shit. And we're talking millions. We're literally talking millions of dollars in one order or a sweep of orders. That's tape reading. That is the true value of tape reading. And again, quite difficult to learn. Sujay, go ahead and email me or Seth@sanglucha.com if you're interested about that. We have another question from Wen here. Do you have an annual subscription other than the monthly? We do offer a discount for if you guys want to just do an annual subscription instead of doing month to month. We totally do offer that as well. It's not listed on the website at all, but go ahead, Wen, and email me. Contact@sanglucha.com. I will go ahead and send you the thing in the question box here as well. Let's take one more question before we close it out. Sujay is saying, wait. We got James here saying, I wondered if after those high-profile big cap tech earnings misses, there was any sign that those huge June and July high Q or SPY calls were closed. So, Jesus, can you talk a little bit about the closing transaction kind of thing? And, do you watch for some of that? I'm assuming you only watch if they roll, but, can you talk a little bit about the closing transaction?
Yeah, and this is a great question, and you got to understand this. If you could throw the screen back to me too, Lucha, because I just want to show a couple examples here.
Sure.
All right, and I should have some notification that, can you see my screen or no? Oh, here we go. Perfect. All right, so basically here's how it is, guys, when we focus on this information. Nailing the top is not going to happen, okay? Noticing when these guys get out is not going to happen. You know why? Because they don't work that way. Here's what they do. They get into Netflix, okay, initially, in size. Then what happens is they'll buy a fade in Netflix, in size, okay? Then, as this thing continues to go higher, what they start to do is roll positions. And what I mean by that, I showed the IBB example, they start taking some profit and then taking a portion of their principal and putting it out in further dated strikes, higher price strikes, to still profit if this thing has more to go. Now, you're going to see call orders on Netflix all the way till it runs out of gas. And you're going to see call orders that go underwater when Netflix finally runs out of steam. Okay, that's going to happen with everything. You're going to see that with the banks. You're going to see that with IBB. You're going to see that with every big move that they nail, because that's their form of profit taking. That's what they do. They rarely close out positions when they come in heavy. They roll, they roll, they roll out, they roll out. And as they keep rolling, they keep locking in profit, and they keep putting smaller amounts behind some of these orders. Okay, so at the tail end of things, yeah, okay, a fistful of calls go underwater, but they made money in this whole ride up on a larger scale. All right, so you're not going to see put action very rarely at the top, and you're going to see still some call action at the top. All right, it happens all the time. That's why.
My bad about you. Can you talk a little bit about how they just hedge the risk immediately too? So when they, when let's say those big SPY Q players are playing for the all-time highs, like are they also coming into the stock and hedging themselves and all that kind of stuff? Can you give me a
Yeah,
little taste of that?
they could, Lucci, here's the thing. They can do a gazillion other things behind the scenes that
Right,
we have no idea, no
right,
clue of what they're doing.
right.
So, unless you know these gentlemen that are placing these bets personally, you really don't know what's behind any single order. But what I've known through my experience, okay, is when they come in with a sharp order and they start repeat buying, as I refer to it, that's a signal that they're taking a serious position. Any other single order, and guys, that's what I mean. We see single orders throughout the day, all day long. And a lot of this stuff goes through my eyes and out the window. I don't look at it ever again. All right, but this is the only way to pick up on when these sharp players are taking a serious position,
Right.
is sifting through this stuff and noticing the sharp aggressive orders, and when they keep coming, as I like to refer
So
to it.
would you
All
say
right?
one should
Yeah.
stop concerning themselves with trying to figure out if
Yes.
player did X, Y, and Z after the shit hit the tape? Like, would you say that concerning yourself with matters like that is a useless
Yeah.
endeavor, more or less?
Yeah, Lucci, because we're guessing. We really don't know. And anytime you're guessing in this market, it's useless. You're
Right.
going to get lucky one way or another.
Right. And
Okay, so that's, go
yeah,
ahead.
to add to that point, it's like unless you're a high level hedge fund trader, let's say, or let's say you're a risk manager for a huge prop desk, or for a hedge fund that the fund itself trades a significant amount of shares and contracts per day, right? If you're the risk manager, you have to come up with creative ways to offload some of the risk that your wild ass PM and crazy manager is trying to get into. This guy wants to buy 1 million shares of freaking Facebook. You're the risk manager. You're the one that has to figure out, like, okay, how the hell do we hedge this dude out of this stuff so he can go ahead and hold this 1 million shares long, or hold these calls, or hold these puts, right? And again, like,
Mhm.
the way these risk managers are able to do it is very creative. They use a lot of complex option strategies. They short stock, they buy stock. They use leaps, the condors. They go out in time, calendar spreads, this and that. You name it. They got all the tricks at their disposal. So unless you're that guy, trying to figure out what these people are doing while they're waiting for their bets to come in is a more or less useless endeavor here.
Yeah, and that's why, again, I sound like a broken record, but if you're looking to hold for a bigger move, or you have to hold for a longer time frame, you have to stick to the early part of the buying. If you're an aggressive trader, okay, you can wait on any little pullback in a name, and if you see a sharp sweeper come in, buy that pullback, and then sell it a couple of days after it bounces. Buy the pullback, sell it a couple of days after it bounces. But if you're looking to tail smaller weekly sweeps up here that chances are could be rolled out, or lottos this long in the tooth of a rally, you're asking for trouble. You're asking for trouble. And logically, look at this move. Now you're buying up here into earnings, and what? You're hoping to see another 50 points in Netflix? There's got to be some realistic views in here. You know what I mean? You got to
Okay.
play some logic here.
All right. So let's close up here. We got one more question. Jesus, can you pull up Priceline here for a second? Give me like a 6-month chart of Priceline. Actually, give me like a year chart of Priceline. We got Najendra here asking about Priceline. Can you talk this trade? I mean, again, like you were asking about JP Morgan too. I think JP Morgan has more upside. When I look at Priceline, it has a wide range, obviously. 1350 seems to be the upside. You have to wait for earnings here. Like, you got to wait for earnings and to see what's going on. There's a lot of price targets here for all-time highs in Priceline. Plus, we have a very bullish market as well. So I could totally see Priceline back up to highs. But at the same time, if the earnings are dismal, or at least the reaction is dismal, that could just put a damper on it for another year, and this thing will just sit in another range. This is a very difficult thing to trade. You want to be a little bit careful here. Deepak is asking about Apple. Go ahead and pull up Apple here. Apple, again, another name that you want to wait for the earnings. Has a pretty damn good sell-off recently.
And some put buying too. We saw some $1 million put sweeper a couple days ago,
Yeah.
which again, puts going into earnings, you take them with a grain of salt, but
Right.
there's no reason to go and now it's a little after the fact here,
Yeah.
but
Yeah.
you have earnings as well.
Exactly. You got to wait now till after earnings, So if you guys are looking to play these things into earnings, like you got a 50-50 shot here and don't look for anything else. Don't look for anything else and don't look for confirmation bias from me telling you, yeah, you should go ahead and hold this shit through earnings. Like I wouldn't do that with your money. You know what I mean? Like I wouldn't do any of that just because like that's not the way, Jesus and I trade, and that's not the way, that we want, our traders to trade as well. I mean, if you guys want lotto tickets, you do what you got to do, but make sure, you watch your risk and all that kind of stuff. So am I going to sit here and tell you to run out and buy freaking Apple before the earnings come out? Hell no, you're not going to get that out of my mouth.
Don't even ask myself or Lucci whether you should buy. I mean, you're better off just throw a dart. Throw a dart. Calls, puts, whatever it lands on, you take a shot if you want to play it. I mean,
exactly.
Lucci's going to forecast Apple earnings. I mean, it's just not possible.
Come on, who am I? Are we CNBC here? Are we CNBC? They don't even have to respond, if they're wrong or right. And this is why people hate CNBC and they hate analysts so much, because they actually put bias up against those things. You know what I mean? So, when Dick Bove comes out and says Citigroup is going to $18 fucking dollars, when the stock was $2 back in 2009, people wrote out a lot of money on that, so that's why people hate analysts so much. And we don't do that shit. We don't do that shit at all. All right, guys. So let's go ahead and close up again. I just want to go ahead and throw out there, you guys got a nice little discount just going out to the Steam Room here just to check it out for your first month. $49. You guys have the link already in your Q&A tab. You'll get rebilled after that at $199. Come check us out. Come check out the Steam Room. Again, it works really good on mobile. Jesus mostly uses this on mobile, don't you?
Well, yeah, it's just as good on mobile as it is on a desktop. It really is nice and clean.
Yeah, absolutely. And again, we are continuing to further our technology. The feed that you guys get access to, the content inside that feed, continuing to bring you guys better technology, better tools, so that you guys can become better traders, make better decisions out there. So we hope to see you in the Steam Room, man. Jesus, thank you for coming out for another Saturday. And we'll see you guys next Saturday.
Yep. Thanks, guys. Thanks for coming. Have a great weekend.